Okay, so that was an overview of microeconomics. Now macroeconomics is what we're going to talk about next. And some of this we've talked about before. We've already talked about the price ceiling and the price floors. What we didn't talk about before is, remember we said the job of companies is to maximize value. Consumers want to maximize their happiness, right? Governments should try to maximize social welfare. That's the job of a government, right? To maximize the social welfare, make society better off than they are before. So sometimes they'll intervene in the markets in their effort to do that. That's what the Vision 2030 is about, right? That's their best effort to try to make the welfare of Saudi Arabia better over time. It's not going to be perfect, right? Because nobody can predict the future, and there's going to be mistakes, and they'll learn from the mistakes and get better. But in general, that's the idea of what they're trying to do. So price ceiling we talked about already, you guys, and shortages we talked about. So in this case, do we have a shortage or a surplus, you guys? If the price is 3 originally, right, this is the original equilibrium. But if we move the price down to 2, because we have a price ceiling, which one's going to be bigger, demand or supply?
Demand is bigger.
Yeah, demand is bigger, right? Demand is going to be how much? What's the quantity demanded? 60,000. The quantity supplied? 40,000. So we have a surplus or a shortage? Shortage of how much? 20,000, exactly. Now, what's interesting about this too is that if you leave markets to themselves, again, if we remove now this price ceiling, and we let the market then decide by itself, if you have a shortage of something, so think about a flower shop, and a flower shop, they open up at like 10 o'clock, right? And then within an hour, all the flowers are gone, right? They're gone by 11. So now they have a shortage of flowers. If you see that as the owner of this flower shop, what does that tell you about your prices? Are they too high or too low? They're too low, so you can increase your price. If you increase your price, what's going to happen to quantity demanded? It's going to go lower. So what's going to happen if you have a shortage is prices will rise until you get back to the equilibrium. If you continue to raise prices up here, if they raise the prices too high, then what's going to happen at the end of the day when they close at 8 o'clock? They have excess flowers that are there that are dying. They have a surplus of flowers. And what does that tell them about their price? Their price is too high. They overdid it, right? So they have to lower the price a little. So this surplus and the shortage are signals to them whether they need to raise or lower the price. So the market will correct itself. If you leave it to itself, it moves back to the efficient level of production. Here, we're going to get a black market. Government's going to have to spend time enforcing this, and there's a lot of inefficiencies here. Yeah, so you can get long lines, right? If there's a price ceiling, it may take you a long time to find the apartment, or maybe you have to queue up to fill out applications with the government to do this. And sometimes you could have higher prices in terms of the black market because you have to pay under the table to people to get by this thing. Okay. And can you guys identify where is the deadweight loss here? Can you guys see the deadweight loss?
Yeah, it is the
Yeah, this one, exactly. It's going to be TRE is the deadweight loss. Because normally, consumer surplus is this whole triangle. And producer surplus is normally that whole triangle. But with the restriction here, they're only going to supply this much. So demand will be here, and we'll lose this whole section. Okay, price floor. We talked about this one already, you guys. Minimum wage. Okay, so in this case, the original equilibrium price is going to be this one, right? And if we set a price floor of 80, which one's bigger, demand or supply? Supply, quantity supplied is greater than quantity demanded. So we have a surplus, right? Yeah. And with this government restriction in place, the surplus is going to persist. And then we're going to have a deadweight loss, right, again, of here. This is going to be a deadweight loss. If we lift this restriction, right, get rid of this price floor, then what's going to happen if you have a surplus? Think about this in terms of the labor market. If there's a lot of people, if there's an excess amount of labor, right, because of this minimum wage, there's a lot of people looking for jobs that don't have jobs, so they're unemployed. In order to get a job, then you might be tempted to lower your offering price to the company, right? I'll work for a little bit less. Maybe I'll do an internship for free to get the job. So competition will lower the price like that to get rid of the surplus. So it's going to correct itself automatically. So this one we talked about before, the efficiency versus the equity. So markets are great at efficiency, but not necessarily great at equity. And it could be part of the problem too, because stock market, for example, is a very good, efficient market for pricing stocks. But this is part of the issue also with the inequality, right? Because who are the people that own these stocks? Who are the ones that own those stocks? Yeah, it's the richest people. The top 1% own like 99% of the wealth in the world. So yeah, it's not quite fair. It's efficient, but they're the ones also that have it all. So it's not completely fair. And because these things are so successful at generating capital, when you do this IPO, when your company is successful in America, like Lyft just did one, right, and Uber's going to do an IPO, you get enormous amounts of money, right? They're talking about all these like millionaires that are going to be created in Silicon Valley in the next few months as these companies go public. So more inequality. Yeah, look at this, 26 people, the richest 26 people in the world own as much as the poorest 50%. So you still think that's fair, you guys? I'm not saying there should be a revolution, but I don't know. What do you guys think about that? What would you guys do about that? What can we do about that? Do we need to do anything about this? What do you guys think? Now, this is one of the reasons the taxes are progressive. I know there's no income tax here, but in general in the US, we have a progressive tax system. Progressive. Yeah, so I don't know the exact tax table, but it works something like this. The $0 to $10,000, your tax is going to be 0, right? And then 10,000 to 20,000, maybe you pay 10%. And 20,000 to 30,000 goes to 15%. This is your annual income, 30 to 50, 20%. And it taps out at around 35% for your income tax, right? So this is kind of their way of addressing inequality to some extent, that the more you make, the more you pay in taxes. So in theory, this is good. However, there's a major problem with that, right? The richest people don't make most of their money from a salary, from an income. They make their money from the stock market. And the stocks pay them dividends, right? And if you get a dividend, the law in America says the dividend tax rate, dividends are taxed at only 15%. It's a flat 15%. So you can have the case where somebody's making, $100,000 a year, which is a good salary, and paying like 30% taxes, but the billionaire is paying only 15% because all their money comes from dividends from stocks. Right? If you got $50 billion in stocks, you get a lot of dividends from that. That's a lot of dividends. You'll get about 2% of the 50 billion just in dividends and never have to. You have a diversified portfolio, right? And let's take a look at that for a second. So Warren Buffett, I think, has like 65 billion, something like this. Warren Buffett. Yeah, so if you're one of these super rich people, we need more zeros, don't we? And you get a 2.5% annual dividend on your stocks, then you're getting, a mere $1.62 billion in income from your investments. That's not bad. I could make do with that. And you're paying only 15% taxes on that. So again, this isn't quite fair. It's kind of like skirting the spirit of this tax law. But how does that happen? Well, how do laws get made in America, right? You lobby Congress. You know what I mean to lobby Congress? You hire lawyers who will then not bribe the politicians, but they do contribute to their campaigns and things like that, take them to dinner. This is legal to do this. And then they pass a law in their favor, right? Wouldn't you like to be friends with those billionaires and take a ride on their yachts and stuff like that, and then pass a law that caps their tax rate at 15%? So it's hard to beat this system. And then corporations on top of it, a lot of these corporations don't pay their fair share of taxes because they can hire the best accountants in the world to shift money into different countries and different corporations and avoid that. And again, you're dealing with super rich corporations. It's like a super human being, these companies, right? If you think that Warren Buffett is rich and powerful, how about Apple? If you guys want to buy Apple, how much does it cost to buy Apple? If we want to buy the whole company, we're going to take over Apple and call it something else. How much money does it take to buy all of Apple? Let's take a look. I'll show you guys. Okay, Apple. Okay, Yahoo Finance, Apple. So you guys can see the stock price of Apple is how much? $203.86. That's here. The beta there is 0.91. Remember we talked about the beta? They're a little less volatile than the market. Earnings per share, that was one of your ratios, $12.12. And the market cap, this is the value of the company. So remember when we said maximize the value of the company, this is the number we're talking about. So when they develop a new product, like the new watch, or maybe they're coming out with TVs, they have the new Apple TV service, right, that's coming out. That's adding value to the company. So how much is Apple worth? Can you guys read that? 961 billion, right? 961 billion. So this is going to be, yeah, that's how much it takes. So this is a $961 billion company that has a lot of money to influence Congress. Yeah, so this is the price of the stock, right? So if we take the price of the stock times the total number of shares of the company, That's the total value of the company, which is $961 billion. So if we wanted to buy a controlling interest in Apple, we have to buy 51% of that $961 billion. And then we can fire Tim Cook and replace him with somebody else. This is the earnings per share, remember? So this is the, for every share of Apple that you own, you get $12.12 of the net of the profit of Apple. Everyone gives you $12.12. The PE ratio is 16.52, which is a pretty good number, right? So we have to pay $16 for every dollar of earnings of Apple. Every dollar is 16, costs you 16. This is not bad because remember we looked at the Case-Shiller PE ratio yesterday, and he said the long-term average is 16 for the US stock market. So this is a fair price for Apple. If you believe Apple's not washed up, that they still have some good ideas, this is a good price.
For each dollar. It's equivalent to 16.
Yeah, so for each dollar of earnings, it costs us $16, right? So it's just comparing the price of that, dividing it by the earnings per share. So the price divided by the earnings per share is that. And this is not bad because once you own the stock, you get that dollar of earnings every year forever. You get it forever. So that's why it's more than what it seems it should be. Let me show you guys some other things here because you guys now know income statements and balance sheets, right? So let's look at some statistics here. Maybe I can make this a little bit bigger. Okay. Some of the ratios we talked about maybe. Profit margin. So they have the net profit margin and the operating profit margin, which you guys did yesterday, right? Profit margin's 22.72%. Operating profit margin's 26%. So profitable company. Return on assets. Remember you guys did this one. Net income over average assets is 10.89%. How about return on equity? What is Apple's return on equity? 46%. That's very, very, very good. Really good, right? And how did they get this to jump from 10 to 46? There's only one way to do that.
They use the bank money?
Yeah, debt, by using financial leverage. So they're using debt to do that. How much revenue do they get per year? You guys can see that down here. Revenue is $261 billion. Gross profit is how much? $101 billion. Right, so that roughly, if you guys use that ratio, you can roughly calculate, not that this is necessarily a fair order, but if they only sold iPhones, right, if they only sold iPhones, which isn't true, then you can figure out the cost of the iPhone compared to the price of the iPhone by looking at those two things. Do you guys know what EBIT does? We talked about EBIT. Yeah, earnings before interest, taxes, depreciation, and amortization. That's what that one is there. What else can I show you guys? Let's just look at their income statement and balance sheet for a second because we're here. Okay, financials. And I want you guys to know where this stuff is if you want to invest in something. Okay, so remember, keep in mind these numbers are in thousands. So what's happening to Apple's revenue over time? Is it going up or going down? Up. For the most part, right? How about from 15 to 16? And 16 to 17? Up. And then 17 to 18? Up. And their gross profit? Yeah, they had some trouble here. They had some trouble this year. But after that, they corrected this. I forget when it was. They briefly had an issue Remember, Samsung was the first to get the bigger phones, and this really hurt Apple. And then they recovered by getting their own bigger phones. But initially, I think that's what caused them to go down like this. How about the research and development, you guys? It's going up. Is that good or bad? Good, exactly. Good. And let's take a look at the balance sheet, because this is kind of interesting. Balance sheets. How much cash? Now, this is a little bit tricky. How much cash do they have in 2018?
But they do it by September?
Yeah, they have an unusual fiscal year. So fiscal year doesn't have to match the calendar year. So a lot of companies that have a lot of sales at the end of the year in December will make their fiscal year different because they're very busy at the end of the year. And they want to, it's just overwhelming on the accountants to do both the year end and handle the volume of sales. So they'll do that. So look at how much cash they have here, you guys. How much cash? 25 billion. And then short-term investments, that's another form of cash, 40 billion. And then they have long-term investments, 170 billion. So that was the 200 something I was talking about before. 170, 210, 235, something like that, $1 billion in cash that they've got. Let's just look at cash flow quick, and then we'll go back to the slides. How is their operating cash flow, you guys? Again, when you guys are looking at operating cash flow, start with this total operating cash flow. So would you guys be happy with that? Does this look good to you guys? It's positive, right? $77 billion in operating cash flow. I'd be okay with that. And their capital expenditures.
No, but it was in 2015 more, right?
Yeah, it was more. I think they're getting, because the iPhone market, the smartphone market is saturated. So they're going through a transition now. We'll see if they'll survive. Look at the investing cash flow. Generally negative, right? Yeah. So they're investing in new stuff, which is good. But they also have these investments they're making in the stock market because they have so much cash. And then their dividends are going up or going down, which is a good sign. Their net borrowings are pretty small. They were bigger here, but I think they got to where they want to be, and then they stopped.
Why the investments in 2018 is positive?
They sold investments. They would sell stock. Yeah, which is maybe not a bad idea, because to me, I think the stocks are overvalued. So what's interesting about Apple is because they have so much investments, because they have so much cash, they're part investment company and part technology company. So these guys decided to sell some of those investments. And the other issue with this that's a problem is that if I'm an investor, why am I buying Apple stock? Am I buying Apple stock to invest my money for me, or am I buying Apple stock to make Apple products and services? I want to buy Apple stock to make Apple products and services. That's what they're good at. In terms of investing, I'm the investor. So if you got extra money, give it back to me. I prefer you give it back to me. But why does Apple hang on to it? What's the strategy for not giving it back to investors? Why do they hang on to that money? All those billions, what can they do with those billions besides buy these stocks and things like that? If there's a threat, right? If somebody comes along that has something good that might undermine them, what can Apple do with that money? They can buy them, right? They just buy them out. Gone. Threats disappears. So a lot of people keep this war chest, right, to do that, to acquire potential competition and better technologies so that they survive. So that's part of the reason they're doing that. Okay. Back to economics. Yeah.
Now for gross profit for average, we already calculate the total revenue and minus the cost. When you are talking about the cost including what? Material cost, overhead.
Yeah, so for the cost for Apple, for the gross profit, so in this case, this is going to be, they have the revenue, right? Cost of goods sold is going to equal gross profit. Yeah, this cost of goods sold here, let's say we're talking about the iPhones. So it's going to be all the material costs, the raw materials to make the iPhone, the chips and the glass and the steel, the aluminum, all that stuff. The labor costs, the direct labor that's putting it together, assembling it in Taiwan or wherever they do that. The machines also, the depreciation of the machines, all the factory costs are here, all the factory, even the overhead, the electricity, the management of that. What's not there is Cupertino's costs, like headquarters is in Cupertino, California, where Tim Cook is and Johnny Ives and the designers and the engineers. They're down here in general and administrative and research and development. This is all happening in California. And other selling costs, their advertising costs, those are not in this number here. This is just the factory costs of making their products like that. Okay. Yeah, so this is a hot topic here anyway, getting back to this. I was just trying to show you these stocks and how much money you guys can make. But we have to think of a solution for this, right? In US politics, they're still debating this because there's a presidential election next year. So a lot of people are talking about raising the taxes on the rich, which is not necessarily the best thing to do either, because if you raise taxes a lot on the rich, what can the rich do to avoid those taxes? Yeah, they can, if it's on their personal income, right, they can always revoke their US passport and move to some low-cost island or something like that. They can move out of the country, like themselves. They can keep, and they can move, if you're going to target the corporations, which they're not, at least Donald Trump isn't, he reduced the corporate tax from 35% to 20% because he wants businesses to move into America. So I think that's a good move. It's a good move in terms of getting more jobs in the country. But again, corporations are now paying tax because we're fighting for these corporations with lower tax rates. But yeah, if you raise taxes on the rich, they can move out of the country. You raise taxes on a poor person, where are they going to move? Nowhere. They can't move. So it's very tricky. Should we send everybody a paycheck? Right? I don't know if that's good either, right? Because then it makes everybody lazy, you know. So, and maybe it's not fun. Yeah, this might be. This is probably good. Yeah, that's good. Yeah, so it's not an easy task, and it's easy for us to criticize the government, and you know, because sitting back here, it's like easy for us to criticize these politicians, but at the end of the day, their job isn't easy to come up with a good solution to all this stuff. Very tricky. And even if they have a good solution, then Congress in the U.S. has to agree on it. President has to sign it. It's got a lot of hurdles to get through. But at the same time, I think we have to do something. Okay, so consumer surplus and producer surplus, you guys are already familiar with that, right? We talked about these things. Let's just list them out in a little more detail to make sure you guys know the difference between these. Okay, so in terms of monopolies, monopoly, we said one company, right? And long-term profit is true or false? Long-run profit is going to be yes or no. That's going to be yes. Are monopolies efficient or not efficient? These ones are not efficient. Only thing that's efficient is going to be perfect competition.
Not efficient in terms of what?
In terms of this, remember we said that only perfect competition is efficient. And efficiency is basically there's no deadweight loss. You have a maximum of consumer surplus and producer surplus. It's only achieved in perfect competition.
Efficient for in terms of consumers.
Exactly. And then the next one is oligopoly, right? How many producers in oligopoly?
3 or 4.
This is a few, right?
Few.
Long-term profit also can be yes. And these also are not going to be efficient, right? Not efficient. That's good. Next one is monopolistic competition. Monopolistic competition. How many companies in monopolistic competition, you guys? This is many sellers. How about the product? Is it the same or different?
Different.
Yeah, this is differentiated products. And because it's differentiated, do we have advertising or not?
Yeah.
Yeah, this is advertising. Long-term profit is equal to 0. Because remember we said if we see the Ferrari, we're going to enter the market. Supply is going to increase, price is going to go down. In long term, there's no profit. Is it efficient? No. Not efficient. Only perfect competition is efficient. So perfect competition, many sellers, right?
Long-term profit is 0?
Yeah, exactly. Long-term profit is 0. It's not, yeah, it's 0. I mean, we're making enough money to pay the employees and everything, but there's no long-term profit. Many sellers, many buyers. Is the product differentiated or the same on this one? This one is going to be the same, homogeneous.
Yes.
We call that homogeneous. No advertising. Long-term profit is equal to 0. And efficient. This is the only one that's efficient. That's good.
Again, why these companies long-term profit is 0?
Because of the mechanisms of supply and demand. What happens in these markets here, remember if we see a profit, if there's a profit in this industry, then other people will see the profit. They're going to be like, I can do that. I can do that. And so they're going to enter the market. Once they enter the market, what's going to happen to supply? Is it going to go up or go down? Increase or decrease in supply?
Supply will increase.
Supply is going to increase, which shifts the supply curve to the right. The new equilibrium price is going to go down because we have more suppliers. And when the price goes down, profit goes down. And if there's still a profit, there's going to be more entry until it drives it out. I want to talk a little bit after this about, yeah, here we go. The macroeconomics. So we talked about some of this we have not talked about. This one is interesting here, the standard of living. Standard of living. So in macroeconomics, the way we measure the standard of living is we calculate the GDP, which you guys already know, right? What is the GDP again? C plus I plus G plus NX, yeah. What's the GDP of Saudi Arabia? What's the total number for Saudi Arabia, you guys? Any idea? I don't know exactly what the number is, but I know roughly. I think it's like, I want to say GDP KSA, maybe 600 billion. What's the GDP of the USA? What's GDP of USA equal to? Any idea? Yeah, this is about 20 trillion approximately. That gives it its power, right? This money is giving them power. Now, but when we measure, this is not a good comparison when we're trying to measure how well off are people in Saudi Arabia compared to the United States. If we just look at this, it doesn't tell us the story because we should divide this by the population. That's GDP per capita. So if we take GDP per capita, this gets us closer. So GDP per capita is about 25,000 here, about 52,000 here, dollars. So at first glance, this looks like, oh, US people are twice as well off as Saudi Arabian people. But that is not quite right either. Why is this not a fair comparison? What's one of the main differences between somebody working in Saudi Arabia versus somebody working in the United States? Taxes, yeah.
The services.
Yeah, so the cost of living in terms of, we have to make an adjustment for the purchasing power, right? And the purchasing power in America is less because of taxes is a big one. Petrol is also much more expensive there. Water and electricity is more expensive. So when we adjust for that, we call this purchasing power parity adjustment. So PPP is purchasing power parity. When we adjust for that, then we get about 50-50, right? You're about equal, about the same standard of
I
living.
think if it is even the same for the KSA or USA or whatever, if it is the same, we have to look for the figures coming from the product or from the services. It's also another very, very important point. Is it coming from the services or a product? If it's services, that's it's more powerful for the company. I'm sorry, for the country.
Yeah, because in
For the
general,
product, that's, I mean,
yeah, there's something to do with that. I mean, in general, this is the benchmark that economists use for standard of living across countries, but it's not a perfect measure. This ignores a lot of things. For example, it ignores like healthcare, freedoms, pollution, all that stuff that GDP doesn't cover is also affecting people's standard of living, right? So, but economists like to use this one because it's easy to calculate or whatever. And by the way, which country has the highest GDP per capita? What do you guys think? Highest GDP per capita? Who? Not Canada. It's, I think you're in the ballpark of Switzerland is in the ballpark. Singapore is going to be up there. It's not the US either. Now, it was interesting, a couple years ago when I did this, there's a close by neighbor that was number one. And the close by neighbor was, yeah, Qatar at the time was something like ridiculous. Like it was something like, their number was something like 140,000. And the reason being is because there's a small population in Qatar. Yeah, very small population. But it was up. But then now recently they've gone down for some reason. Something has happened. But they've gone down a little bit. They're no longer number one. I might have a graph here to show you guys later where the countries are. But that's how we measure that one.
Ryan, again, regarding for the adjustment, can you repeat this using the purchasing power party adjustment?
Yeah, the adjustment.
Yeah. How to do so? So if I want to compare Jordan to Saudi Arabia, any country.
Yeah, so this is already done for you guys. If you guys Google the purchasing power parity, the IMF and the World Bank already make those calculations. But basically, it's not going to be a simple thing to do, right? We have to make an adjustment to make this apples to apples, right? What if there was no, if there were, because there's no taxes here, you can buy more with these goods, and because the petrol's lower, so they have to make a tedious calculation to figure out exactly what this 25,000 can buy relative, what is the purchasing power of the money versus the number itself. So it's not a simple calculation. Where did we go? Sorry. Power went out and we went backwards. Okay, I want to talk to you guys too a little bit about unemployment, inflation, and economic growth. So let's talk about unemployment for a little bit. You guys should know this. There's labor force is going to be equal to employed plus unemployed. So people are considered to be in the labor force, either if you have a job or if you're unemployed. Now, what does it mean to be unemployed? This is kind of tricky. So if you're unemployed, do you have a job or you don't have a job? But it's not that simple. So no job, plus there needs to be some other condition. What's the other condition? You have no job, but you're looking for a job. So you have to be actively looking for a job. Actively looking. What happens here, and you have to view these, the reason I'm mentioning this is when you guys look at unemployment figures, you have to read this skeptically for any country, even the United States. Unemployment in the United States is really, really low. The official unemployment number is like at a 40, 50-year low. It's like 2%, something like that. And however, it doesn't tell the whole story because you're considered employed if you have a part-time job, right? You're considered employed if you're in a job, say you used to work at JP Morgan and you're making $500,000 a year, and you lost the job during the financial crisis, and now you work at McDonald's earning $15 an hour while you're employed. So it's not considering those sort of things. So people who are working part-time that want full-time jobs, people that are underemployed because they're not in the right job, right? Somebody, a doctor who's driving a taxi or something like that, they're considered unemployed. And what can happen here as well is you start off as employed, right? And then you lose the job. You become unemployed because you start looking for a job. But eventually, if you can't find a job, you might become discouraged. So there's something called discouraged worker. And once you're discouraged, then you stop looking for work. And if you stop looking for work because you give up on trying to find a job, you're no longer counted as unemployed. So the official numbers do not consider the workers who've dropped out of the labor force. That means you've dropped out of the labor force. So we have to look at the labor force participation rate. We want to see this number rising. Labor force participation rate is going to be labor force divided by working age population. Labor force divided by working age population. Working age population. And what do I mean by working age population, you guys? How old do you have to be to have a job here? 18? Yeah, so anyone who is above 18 and not incarcerated, right? They can't be in prison because they're not counted, at least in terms of these statistics. Yeah, how many of them are either employed or looking for a job? Right, that's the labor force. So if you become discouraged, you drop out of this and the labor force participation rate goes down. So if you see the labor force participation rate going down, that's not a good sign. Not a good sign. Now here in Saudi Arabia, there's some very interesting things happening with the labor force, right? Because they had a big law change here. When was it, this year or last year?
Last year.
Women can drive, right? So as a result of women driving, car accidents are up. No, I'm joking. It means that they can, they're more likely to go out and find a job or look for a job, right? So the labor force is going to go up or go down? Yeah, so more of them maybe start seeking work, right? And they're opening new opportunities for not just women, but other Saudis here as well, right? Because there's a Saudiization thing going on. But yeah, you see more women working, things like that. So labor force participation, especially among women, is going up. And is this good or bad for the economy? This is good. This is good. Why is it good? We can think of this in terms of the equation, right? The GDP. If women are working here, are they going to spend more money?
Yes.
Or just give it to their husband? Yeah. They'll spend it. Yeah, I understand the culture here is that, correct me if I'm wrong, but I heard that I heard that that the man is supposed to pay for everything. So
Yes.
if the woman works, then that money will be considered to be hers. Hers. And it depends upon the family, of course. But
No, no, it's share for sharing.
Now it's
Whatever you have for all, whatever she has for her.
but that's good for the economy, right?
she
Because
will consume.
yeah, she'll consume more. So this is very good. So that's labor force participation rate. Unemployment rates is going to be the unemployed divided by the labor force. This is the unemployment rate. Unemployment rate. So I have you guys do some calculations on this. Now, bringing this back to Saudi Arabia also, do you guys know what is the youth unemployment rate? There's different levels of youth unemployment, but one of the categories is people aged 20 to 25, like in Saudi Arabia. What is the unemployment rate of people aged 20 to 25?
I think 13.
1% now.
17.
It's high. I think it's above 20%. I think it might be above 30%. So this is an issue, right? This is an issue that the government is trying to address. So now that we know this, we know why they're doing Saudiization, right? Because those people may want to have jobs. So government has to do something about this. On top of it, we have like population booms, baby booms and things like that. And there's a baby boom in Saudi Arabia that's working through the school system, right? It's kind of like a wave that's coming through the school system. It's a higher, a big spurt in the number of people that were born in a certain time period, right? And that's moving through the years, through the school system, and through the university system. As it moves through the university system, right, the number of graduates, male and female, is going to go up or go down. Once they graduate from college, they're going to enter the labor force. They're going to enter the labor force first as unemployed, right? Because they're going to be looking first. That's the first step. As you graduate, you start to look for work. Labor force participation rate goes up, which is good, but at the end of the day, they want a job. And there's some predictions that if nothing changes, the unemployment rate could go to like 40%, 40% by 2030 in Saudi Arabia. So this is a huge potential issue that they're trying to address with the Vision 2030. So yeah, not all the plans that they're doing are popular, right? Not everybody loves Saudiization, especially if you're not a Saudi. But they're trying to address this because for the country it's a real issue. And they'll have to work through what are the best policies to address that. But keep that in mind and look at the unemployment numbers are important because it's going to affect the businesses, right? If unemployment goes down, what happens to your business? Is that good for your business or bad for your business? Good. Unemployment rate goes down, more people have jobs, more spending. It's good for the economy. What's good for the economy is good for everyone's business. Exactly. That's why we should keep an eye on this. Now, the overall unemployment rates in Saudi Arabia, how much is the overall if we look at everybody? What is it? The total unemployment rate for everyone in Saudi Arabia.
13, I think.
This is around 12%, I think. Around 12%. Now, what's the rate for the men versus the women? Are the men lower or higher than the women? Yeah, men are lower. Men is what? What is it for men? What's the unemployment rate for men?
20?
No, the overall is around 12, so the men are less than that, maybe, I think it's said like 5% or something. And women are a little bit higher. But anyway, these are things that are good to know. And it helps you to understand what's happening with the with the country. Also keep in mind that those demographics and how things will change over time with that. And how that might affect different policies. Okay. So this one we talked about before. You guys are good with this. You know the GDP. Okay, so here's the world's biggest economies. So we have the nominal GDP over here. So you can see the US is about, projection for 2019 is 21 trillion. China is number 2, right?
Can we turn back to the other slide, please?
Yeah. This one? One more. Oh, did I skip that?
No, thank you.
Okay.
X minus M is
Exports minus imports. Okay, so this is interesting, you guys, right? So here's Canada down here. Poor little Canada. Italy, Brazil, India. What do you guys think of China, by the way? You guys happy with the happy with them? I'm a little bit skeptical of their. They have something called the Belt and Road Initiative, right, where they make investments in countries. Yeah, so I think this is good and bad in some ways, right? If you do infrastructure investments in a country, this can help the country grow. This is good. But I think like in Myanmar, what they did is they, and I don't know if this is their strategy, they built a new port in the country there. And I think they spent more than what was needed. And they loaned money to the country to build the port, right? But then the country couldn't pay the money back, so then China controls the port. Now it becomes theirs. So they're doing all these things all over the place. So I'm a little bit skeptical of their true intentions with this sort of thing.
Dr. Qatar is not here because of last year only?
No, this is because this is not GDP per capita. This is just total GDP.
Good.
So their total GDP is going to be pretty low.
The GDP growth
But-
this is versus last year or versus what?
Yeah, this is just this year and last year, the top countries overall. So if you look at GDP per capita for China, they're actually pretty low, you know, because there's a lot of people in China. There's a lot of people. I remember when I went to Shanghai, they had some sort of underground shopping center. I went in there and it's just like, you're just like packed with people. And I like to have like personal space, and there's no personal space over there in China. Okay, so GDP growth. This is how you guys can measure the growth of the economy. It's very easy. We just compare last year's GDP to this year's GDP. Take the difference. So GDP growth is going to be GDP, say, in 2018 minus GDP in 2017 divided by GDP in 2017 times 100. So just take the new one minus the old one divided by the old one. That's how we can calculate the numbers back here that we showed over here. So GDP growth rates for America was 2.4%. China, faster, 6.4%. India, even faster, 7%. And I think you guys, it's about 2%, something 1.82%, something like that right now, which is not bad because US is over here. Japan's only 1.2, so that's not bad. Now, there's a difference between nominal and real GDP. And the best way I can describe this to you guys is by thinking of your salaries. If you guys get a raise at work, do you guys want to have a raise at work? Get more money? What do they call it here, a raise at work? It's a raise? Yeah, a salary increase. A salary increase. So say that your salary increase is 5%, right, in 1 year. But inflation is growing at 3%, so prices are growing at 3%. It means your real increase is only 2%. This is real. This is nominal. Yeah, so same thing with GDP. We have to adjust GDP for changes in prices. So real GDP freezes prices, and we're only looking at the quantity of new stuff that we're producing, right? The production, not the change in price. So if we assume prices stayed the same, right, what would the new GDP equal? And we can do that with simple examples, which I give you guys in the workbook. Standard of living, you guys know how to do that. GDP divided by population. But we have to adjust for purchasing power parity, like we said before.
So the inflation percentages, or we will cover this, right?
Yeah, inflation will cover also. Okay, so look at this one, real GDP per capita, you guys. Who's number one? Luxembourg. Who's number two? That's pretty surprising. Norway I can kind of understand, right? Here's Switzerland. Somebody said Switzerland. Who else do we see here? Yeah, I don't know why you guys are not over here, because you guys, I would think, should be in this graph as well. So I don't know if they purposely took that out. This says Europe something, so maybe they're just comparing Europe to...
No, because it's 1995 versus 2017.
Oh, is that it? Maybe that's why they didn't have enough data? Oh, okay. I see what you're saying. But yeah, anyway, I was trying to see where Qatar was. They're not here anymore. Now, the unemployment we just talked about here. So what is the labor force again, you guys? Just to review. Labor force is equal to what?
We plus
Unemployed plus employed. And to be unemployed, you have to be what? Actively looking for a job and you don't have a job. Exactly. Okay, good. You guys are good. So unemployment policies here. So this gets back to the fiscal policy and the monetary policy we were talking about before. If unemployment is high, what can the government do in terms of fiscal policy to try to reduce unemployment? Remember, fiscal policy, we can change G or we can change T. Fiscal policy. G, which is government spending, T is taxes. So if unemployment is high and you want to reduce unemployment, increase G or reduce G? Increase G, because we'll have more projects, right? Creates more jobs, money is pumping into the economy, unemployment rate goes down. So unemployment goes down. How about taxes? Increase or decrease taxes? Decrease taxes, unemployment rate goes down. How about in terms of monetary policy? Monetary policy, if we want to reduce unemployment, interest rate goes up or goes down? Down, exactly. Then consumption will go up. As consumption goes up, unemployment rate goes down. Business investment goes up as well. Unemployment rate goes down. So that's how we solve this one generally. Now there's other things that they did here though, right? They're doing different things than just that here. So we talked about those already. I guess in some ways you could consider the women driving is maybe a way to reduce unemployment for women. What do you guys think? For sure it gets more of them in the labor force. But it's more than that. They need it more than that policy. Also Saudiization, right? So they have policies like Saudiization. That one is supposed to reduce unemployment for Saudis, right? And what else did they do to try to, what other policies in Vision 2030 to reduce unemployment here? Expat taxes, right? So the idea behind, and again, I'm not trying to judge whether this is, I agree or not with these things, but understanding the idea behind it, right? So what's the idea behind the expat tax? If there's a tax on the expat, then the cost of employing the expat goes up or goes down? Goes up. So in terms of thinking economically, right? What's a substitute to an expat? A Saudi. So it's like the Yeah, it's like the coffee and the tea,
Yes.
right? So if you have the price of the expat goes up, then demand for Saudis should go up. And then if demand for Saudis goes up, then the unemployment for Saudis goes down. That's the idea behind that, right? Now, of course, with any of these policies, they have to measure how successful is it, right? So if it's not successful, then they might have to change that. If it is successful, then good. So anything else? I know they had these two. Is there anything else?
There is no specific jobs only for Saudi.
Yes, there's some industries that are only for Saudis, right? And the list is growing, I think, right?
Yes.
So I guess that's full Saudization, right? That's full Saudization.
Same.
And they have full and
All
partial.
one way.
Yeah, it's together here, right? I don't know if there's anything else.
Manufacturing, they are trying to be
Localized.
yeah, manufacture or import some
Instead of importing outside manufacturing, meaning,
Neon
Oh yeah, I
localization.
heard that they're gonna build.
Neon.
something for
Oh yeah. You're right. You're right. NEOM is one.
Neon. Neon project.
Yeah, new projects, which is the government spending, right? Government projects. Yeah, you're right, because they even talked about some of the weapons, right? That they're gonna create some of the weapons here.
Generally, sir, that they're going to make localizations for all the services and products.
Yeah, and also there's the tourism, right? The opening up to the tourism sector.
Yes.
So there's a lot of stuff they're doing, and they have to do a lot of stuff because they know the numbers and they know the projections on the unemployment. It doesn't look pretty, so they have to address that. Okay. So inflation. Let's talk about inflation for a little bit here. You guys already told me you guys know what this means, right? What is inflation again? Inflation means prices are rising, exactly. Now, is this good or bad if inflation? That's what everybody says initially.
As a consumer.
But, as a consumer, ceteris paribus. But if I ask you another question, do you guys want to have a raise next year at work? Do you want them to pay you more money? Yeah.
No, it depends on the inflation.
It's same what you said
It's
before.
this,
The actual
the
nominal
increment-
increase and the
tricky
real
question.
increase.
The increment it should be in parallel with
Same with
the
nominal-
prices of
Yeah. So you do want that.
yes.
So-
Actually,
But I need real increase, not nominal.
Brian,
Yeah.
in our company, it is American one. They used to increase, and at the end of the year, they will pay you the percentage of the inflation.
Yeah, cost of living adjustment. We call that a COLA.
Little bit.
Now, if they raise your wages, right, supply curve shifts to the left, right? And then the price of the product is going to go up, which creates inflation. So one creates the other. This is called cost push inflation. So you guys like raises. And if you like raises, then you have to like inflation a little bit because it's going to create some inflation. So a little bit of inflation is good because it means the economy is growing. You guys are getting wage increases. That's okay. But you want your real inflation to be not so high. Now, Venezuela is a crazy, crazy case. Do you guys know how high their inflation rate is over there? It's changing day to day. Yeah, I heard a number that was above 8 million recently. 8 million% in 1 year. I've heard 10,000% in 1 day. I talked to somebody from Venezuela because I can't even get my head around this, like how that actually works in the stores and things like that. What he said is they have no prices on the products because the prices change so fast that they keep an Excel spreadsheet. And the Excel spreadsheet, every hour, they can change the price of the goods. And I still don't understand how people can survive with that level of prices and how that works. Yeah, and I don't think I can travel down there either because I don't think they...
This type of
Hyperinflation.
inflation.
How it's come?
Yeah, so the way this can come is if it relies on the central bank. So central bank's job is to contain inflation. So the way they do that is to raise interest rates, right? And the way that you guys raise interest rates, inflation will go down. The way they actually do this is they buy and sell bonds on the open market, right? And the banks are buying these bonds. So if I sell a bond to the bank, right, I'm going to sell a bond to the bank. Is the bank paying me money or not? The bank has to pay me money for the bond, right? Bank has to pay me money. So dollars are moving out of the bank. So that means there's an increase or a decrease in supply of dollars at the bank. Decrease in supply. And if you decrease the supply of money, the interest rate is going to go up because the price of money is interest rates. Yeah. So if they sell bonds to the banks, that means the banks pay them for the bonds. Their supply of money available for loans goes down, and interest rates go up. Interest rates go up, inflation goes down. So if you properly manage this with open market operations, and your central bank is independent and well managed, you can contain inflation. If the central bank is not independent or doesn't know what it's doing, things can get out of control, which must be happening here. And I'm not judging anyone, like the president of Venezuela, what is it, Maduro? But the guy from Venezuela that I talked to said that his background was, and I have nothing against bus drivers, but he said his background was a bus driver. He has no education in economics or anything like that, how to run a country. And so he's just spending too much money and central banks not being managed right, poor fiscal policy, right? So if you have poor fiscal policy, you can contribute to inflation as well. But yeah, this is just a big mess. Yeah, so here's the highest inflation rate countries. And again, this changes like daily for Venezuela. But crazy over here. Egypt is here. Any of you guys from Egypt? I don't know what it is now. This is changing, right? What's the inflation rate now in Egypt? Yeah, so we have these, and then some are actually negative here. Brunei is negative. These guys are pretty low. But in general, like...
If it is negative, what is the inflation economic you take?
Prices are falling, and again, people, to me, I don't necessarily mind that prices fall. But I think people are afraid of prices falling. This is called deflation. And this happened in Japan. If we have deflation, the problem with the deflation is this can affect the stock market. Stock market can deflate in value. And then your wealth is going down. Real estate prices going down, right? This is what happened in Japan. The real estate prices start crashing, and then your wealth goes down. If your wealth goes down, there's some sort of a wealth effect that says if I feel poorer because my stocks are going down and my real estate's going down, I'm going to reduce my consumption. And if you reduce your consumption, then the GDP is going to go down. So that's what people fear about the deflation. So they think it's healthier to have a little moderate inflation because it means we're growing and this is normal. So 2% is usually the target of the central banks. They target 2%. Okay. And I think I have some inflation problems for you guys to go over. Okay, so I think we talked about this again, how to combat the inflation with the central bank. Recessions, again, what is a recession, you guys? A recession is going to be 2 consecutive quarters of negative GDP, right? So what's a quarter? What's the first quarter, you guys? It starts when? January 1? Ends when? March 31. And how about quarter 2? Starts April 1st and ends June 30th, exactly. So if I have minus 5% here and plus 1% here, did I have a recession? No, because it has to be 2 consecutive quarters. So that's not a recession. Okay, so I think this is good for this one. So what I want to do now after the break, is the break at 6, you guys?
No.
Yeah? So after the break, we'll do some economics problems first, and then we'll finish the last couple of chapters that we haven't done yet. Because there's a lot of economics problems in here, and I want to make sure you guys understand some of those. So 620, is that okay, you guys? 625?
625 is good.
624? Okay, so I want to work on some solutions with you guys. So I think we should definitely do a little bit of time value of money just to see how you guys are doing with this. So page 36. Why don't you guys try to do page 36? And I'll come around and see how you guys are doing with that.
Multiple choice?
Yeah, try that, page 36, multiple choice. It can be multiple guess. Just kidding. Yeah. 36. Yeah, page 36. That's okay. I can write the formulas here again for you guys. So present value is equal to future value. T, and future value there we go. Why don't you guys work on some of the economics problems?
We are waiting for this part. I don't know if we will cover it today or.
Let me see that here. Why don't you guys try this one? That should be good. Yeah.
Divided? Should be divided.
Oh, you're doing the present value. Yeah, so you have to do divide. Yeah, yeah. Mm-hmm.
This is future value?
Yep, that's future value, exactly. Sounds good. You want me to check it?
I didn't take this number. I didn't consider it.
Okay,
Because this is the result of 12. Right?
I'll check. What's going on with my calculator here? Okay. Nope, that's not the answer.
So the present value
Yep.
equal the future value, which is here,
Mm-hmm.
right?
Yep.
Divided by 1 plus the 0.2, the interest rate,
Mm-hmm.
0.2, up to 12.
Perfect. Yep. Looks good.
How to calculate it? 400 divided by, I have to open a bracket, right?
Mm-hmm.
1 plus 0.2.
0.02. Yeah, I don't know what you can do now. Yeah, they should give you a backspace, huh?
Yeah, should be.
Maybe the C will do it. I don't know.
No. Oh, maybe yes. 0.2. Right?
Mm-hmm.
Up to how
To the
calculate
power
this?
of
Power
the XY.
of
Yep,
12
12. Yeah.
equal.
Looks good. That looks good. Looks good. Yeah, that's the right formula.
Forget the annual fee. The annual fee. What is the
Oh, the present value of an annuity. Yeah, so you have to find the formula for that one. Yeah, we'll give it to you guys. We'll give it to you.
in the exam?
Yeah,
We give it all the equation.
all the equations, yeah.
So,
Yeah.
It's very difficult to give it
Yeah, yeah, no problem. Especially the annuity one. How are you guys doing?
This one, I think. It is supply versus demand, I think. Consumer share.
Yeah, so this one, what you guys want to do is draw the graph. I'll show you guys here. I'll get you guys started. Okay. So, you guys want to draw the graph, so you just start off like a normal graph like that. Price and quantity. And then it says the equilibrium quantity is 10, equilibrium price is 8. Maximum someone's willing to pay is 20. So maximum somebody willing to pay is 20 is this point where the demand intersects the y-axis. That's the maximum price, 20. And then you draw in supply like this. And this is going to be the price, which is 8, and quantity is going to be 10. And then once you have that, you can calculate the consumer surplus using the formula 1/2 base times height. So the height of the triangle and the base of the triangle times 1/2 is that. And then producer surplus is here. The height is here. Base is there. Calculate the producer surplus. That's it. Yeah, so try that one. guys okay?
The technique is okay. This one is okay.
Yeah,
This one, it's easy and simple.
yeah,
And
yeah.
I wish the example be like that. This, I don't know what's the meaning of,
Oh, of the pieces?
yes.
Yeah, so the present value of an annuity, so 600 per month, this is the cash
600,
flow.
600, 600, 600, like this, like?
Yeah, for 11 years, yeah,
Yes,
yeah, yeah,
666.
yeah.
And here also, I should take calculation, how
Yeah.
much this,
Yeah, exactly, present value of all of those.
it will be sum,
Yep,
No.
sum all together, exactly.
the sum,
No, you have to do the present value of this one, plus the
Yes.
present value of that one, present value of that one, present value of that one, present value of this one, and present value of that
how are you?
one. Yeah,
Um,
yeah, that's
stick
it.
here. Only this one is
Is there okay?
correct, 100%.
Yeah,
So excuse me?
looks good.
This one, annuity, I think that one of the present value.
Yeah, exactly.
That's one. So it means here the one minus one 0.01
Exactly, 1.01.
power 11.
Power of minus 11, negative 11. The power of minus 11. Yeah,
Divided by 1.01.
just 0.01.
1.01.
Yeah, no 1 in that case.
Here's 1 minus 1.01 xy minus how can I get one?
What was
How
that?
can I get power minus?
So do the power, which is that x over y, and then the minus is, you can plug in the number first, which is 11, right?
Yeah.
So you type in 11, and then there's a negative positive button.
This one, maybe?
No? Where is it? Let me check on
I don't know.
this one right here. Where is it?
That one, yeah. I got it.
Do you see it?
Yeah, maybe. I will try.
Yeah, that one. Yeah. Yeah, this one you got to be very careful with the parentheses. Yeah, for that one, you're doing present value. So you have to do present value of this one, present value of that one, present value of that one. Each one, add them together, yeah.
Third one, and the future value from this equation. Then I use the original one, this one, to calculate the present value.
That you can do, yeah, no problem. You can do that, or you can use this one, which is the present
I use
value.
this one and
But that's what I like to do sometimes, because some of these formulas make more sense. You can memorize one formula.
yes,
Not that you have to memorize the formulas, because we give them to you. But if you memorize one, then you know how to do present value like you just did. So that was very good. Good job.
Tell us how to do this. 1 minus 1 xy 11 minus
Mm-hmm.
equal that one.
Yeah, so do it like this. You have to do 1 minus, and then left parenthesis.
Yeah.
1.01, close the parenthesis,
Yeah.
to the power of 11 minus equals,
Yes, that's what my number.
and then divide it by 0.01. Divide it by 0.01. I think you divide it by 1.01,
Oh yeah.
but you only need to divide it by 0.01 because there's no 1 plus here.
Yeah,
So
yeah.
just divide by
Yes,
0.01.
that's my part.
Yeah.
Yeah, yes. That's right.
Looks good, looks good. How you guys doing? Good? 1 second.
this from right?
Yep. Present value equals future value divided by.
Which is 400.
Mm-hmm.
Power of
12. Yep.
right? Divided by 102, right?
Yep. Looks good.
So the result, okay, here the same, here the same.
Yeah. Looks good.
So 400 plus,
Yeah. Does that look right? Which one did you do?
I have the first one.
Yeah. So the first one is
400,
400
yes,
divided by 1.02 to the power of 12.
no, I do mistake, yes. I make power on, oh yes, I make power on 400 after that.
Oh, okay.
Okay, thanks.
Yeah, so you should be good. Yep.
1 second and fourth. What about this?
So we have to do the present value of the annuity in this case.
So this is 600 for 11 years.
Yeah, but there's a shortcut formula. You can use that formula. Yeah, this is a shortcut in this.
انت بالايفون بدك تعمل بس خلصتهم
You guys okay? How are you guys doing? This looks good. So what did you guys get for the consumer surplus? 20 minus that
20 minus 8
is 12.
and is 10.
120. Yeah, perfect. Perfect. Exactly.
But how to get this one?
This one, if I don't say anything, then you assume it intersects at 0.
Okay.
So if it intersects at 0, then it's 8, or whatever that is. Yeah. That one looks good. You guys are okay?
For here, I should make like this: 300 divided by 1.5, then 300 divided by 1.05.
Yep,
to the power
perfect.
of 2, then the power of 3, power of 4, power of 5, according to the
Yeah,
revenue,
exactly.
to the income per year.
Perfect.
Yes, okay. But for this one, we cannot
Present value of an annuity. So the formula is in there. I-
so we should make it for each, not like this one, not like this. Yeah, 6,600 divided by 1.01.
Yeah, that's not going to work.
Yes, to the power.
You have to use this one. Yeah, that formula. Which I'll give it to you guys on the test, right? But we have to use that formula.
For both. Three. For last one only.
Only for 3.
See this question? The following answer the investment and the real estate insurance, it's same answer. So which one is
Let me take a look at this
yes,
one.
please.
Yeah, so managerial finance is more finance within the company.
Yeah.
Right, so it's going to be related to, this is more for investment companies,
Yeah.
not
because-
regular companies.
Yeah, because I saw it here, it's investments and the real estate and insurance is same answer. So what's
Yeah.
the best one?
This one. This is for managerial. They focus on what projects to invest in.
You
So
mean
it's
the
going to be
capital?
this. Yeah, exactly. That one.
Okay. Thank you so much.
Look. So what next?
Producer surplus is.
This is the producer surplus, right?
Yeah, that looks good. Yep, perfect, perfect. You guys are good there. Now,
If they are both are equal, this will be efficient.
Generally, the definition for efficiency, if there's no dead weight loss, then it's efficient. Like we didn't put any restrictions on this market. There's no price floor, there's no price ceiling, there's no taxes. If that's the case, it's going to be efficient. So you can just say there's no dead weight loss.
Okay.
That means it's efficient.
Which means that if they are both are equal, 60 and 60, or
It doesn't have to be
It doesn't-
equal. It doesn't
okay.
have to be equal, yeah.
okay.
And how about this one? What is consumer surplus in your own words? What do you think that means, consumer surplus? So in this,
surplus that, that the consumer are using demand, supply.
yeah, so in this case, the price is 10, and these guys are willing to pay more than 10. Like this guy was willing to pay 20, and he only had to pay 10. So this is his happiness is equal to 10. And this one's willing to pay 18. They only had to pay 10. So their happiness is 8.
Okay.
And so this triangle is the sum of everyone's happiness
Okay.
because they got a good deal. So it's a measure of your happiness. Like if you go shopping and you buy something and you're expecting a higher price, you're willing to pay double what you paid. That feeling you get of what you're willing to pay versus what you actually paid is a measure of your happiness.
Okay.
That's what consumer surplus is.
Okay.
So here it means more people they can buy more.
Yeah.
If they,
Yeah, they were willing to pay more than they actually had to, so this
They-
means they have,
They are up to 20, and the
Price
product
is 10.
itself is 10.
exactly.
Okay.
Yeah, and this is the sum of every consumer. So this is only one person. Another one is 19 is their top price, 18. These guys are below the price, so they won't even buy because they're only willing to pay. Yeah, they won't buy because they'll buy something else, generic. Yeah.
Or wait for the discount.
Yeah, they'll go to China and buy it. Yeah.
Wait for the discount time.
Yeah, exactly. You guys okay?
No, this is fine, but this is not.
This one you need the present value of that one. Yep. That formula. It's not working?
I'm not sure if maybe from the calculator or
Yeah, you can calculate.
1 plus, which is 1.01,
Yep.
correct?
Power of minus 11, exactly. Maybe you have to do it like this. Yeah. Change the sign after the number. So, what was that? So 1 minus, parenthesis, 1.01, parenthesis, and then put the number, 11 minus, there.
Okay.
I think so. No, I screwed it up too. Minus 1.01 to the power of 11 minus. Yeah, that's right. So do it to the power of then, and then put 11, and then minus before you hit that. So before you hit the equals, after, yeah, so, okay,
1.01.
1.01
Okay.
to the power
To the power of.
11
Okay.
minus,
Okay.
and then equals.
Okay.
Yeah.
Power of 11 minus, then equal. Okay.
Yeah, exactly. Then you'll
Now
get it.
minus. Okay.
Yeah, that was it. Guys, okay?
For this one, I calculated,
That looks good.
but the answer يعني not matching. This is correct 100%.
It's probably correct. It's probably just a rounding. It's probably rounding difference between the two calculations.
Nothing is, the difference is not 0.43, 0.37 is nothing in the point, the difference.
and for me it's 1,696. And I use the same formula.
Let me see this one. So 500 divided by 1.05 to the power 3. Yeah, yours is really far off. 300, 300, 500.
Same. I did mistake. فرحان بجد. فرحان. يعني ما تشطرتش لما انا بعدت من عندك.
Oh, this one, you have a 1.5 instead of 1.05.
Thank you.
You guys okay? Okay, sounds good.
Yeah, thank
Yeah.
you. Yeah, thank you.
Okay, take care, you guys. You guys okay? Yeah, let's go over the answers to these ones quick. You guys want to go over the answers?
Yeah, please.
Only zero. If I did same mistake in the exam, zero.
Yeah, -10.
Thank you. But at least the technique is good.
Yeah, it looks good. Technique is good, yeah.
So give me 6 at least.
I don't grade them though. I only make it. Okay, let us do this one. So we had this one is page 36, right? Okay, so this one, you guys, for number 1. So we do future value, right, is 400. T is going to be 12. And R is going to be 0.02, 2%. And you guys want the present value. So present value is going to be equal to future value divided by 1 plus R to the power of 12. So that one is 315. You guys okay with that?
Yes.
Okay, that one's there. Then the next one we had to do also, I'm going to copy this stuff down. What do we know? We're calculating the future value, right? So that's a question mark. And T is going to be 4. And 800 is going to be present value, right?
T is 20%.
And R is going to be 20%. Okay. So we need future value, right? So take the present value times 1 plus R to the power of 4. 1658. Does that sound good? Okay. Now the next one, what we have, they give us the 600, right? Is going to be the cash flow. Okay. Yeah, so we have a formula here, different formulas we can use. So cash flow in this case is 600, right? Interest rate is going to be 0.01. And what else do we know? T is going to be 11, comma.
Yeah, go.
Okay, so far so good. Yeah, and there's different formulas. There's different formats for the formulas here, you guys, to do this one. But one of them is this method. We can do cash flow over interest rates plus 1 minus 1 divided by 1 plus R to the power of n.
Cash flow multiplier. Cash flow multiplier.
Multiply by,
Not divided.
Which formula did you guys use?
Page 26.
Page 26?
24, I use.
This means the present value ordinary.
26 in the PowerPoint? Okay, let me get the formula for you guys first.
26, module 5.
Module 5, okay. So let's write that down first, and I'll show you guys how to do it. Okay, so cash flow times 1 minus 1 plus I times 1 minus 1 plus R to the power of minus T divided by R, right?
By I.
What is I here?
R.
Yeah, R and I are the same.
R and I same?
Yeah, same thing. Okay,
And
so let's get our brackets here. And so I'm just putting some brackets around this to make it more readable. Okay. Okay, yeah, so sometimes what's good to do here is do the innermost function first if you want to be on the safe side. You can try to do it all together in your calculator. That's okay too. But if we do 1 plus R first, right? 1 plus R is going to be what? 1 plus that. So far, so good. Let's do it one step at a time. Then 1 plus R to the power of minus 11, right? So we're going to take this to the power of minus 11. So that one's there. Then 1 minus that, right? 1 minus all of that. So we'll take 1 minus that, and we get that, 0.10. And then we divide that by R. Divided by 0.01, right? And we get that. And then we multiply it by the cash flow. And we get that. So that's, you know, if I'm doing it by hand, I like to do it in pieces like that, because then it's much less likely to commit an error. Because when you do it all together, you got to, if you're going to do it all together on your calculator on the test, you can't mess up the parentheses or anything like that. That's why I like to break it down into simple steps, and then it's easier when you're doing it by hand.
But it will take no time.
I don't think it'll take too long. Same thing. It's easy, you guys. How about the next one, you guys? So let's do the timeline here. 0, 1, 2, 3, 4, 5, 6. And what's the first cash flow, you guys? 300?
This one, what we need?
Zero.
That one we need.
300?
300, yes.
What's next?
300.
Yeah.
500.
Yeah. 100? 400? 500? 600? 700? What's the R in this case? 5%? And present value is going to be equal to 300 divided by 1 plus R, right? To the power of 1. And then 300 divided by 1 plus R to the power of 2, and blah, blah, blah. And then we get the total present value. It's a little bit easier with Excel. So 1758. Okay, good. Okay, so I think you guys understand present value and future value. So I think you'll be okay to do 37 by yourself. Let's do a couple economics problems and then we'll come back. So let's go to, you guys tried page 55. Page 55 and 56. 55 and 56. Let's try that. This is economics. Because you guys will have at least one problem with economics on the test, so I want to see how you guys do with this one. Yeah.
I tried to make this, but it's not come like that.
That doesn't look
With
good.
This machine. And see, there is letter E here. I don't know what is this.
That one, that's not good. And 666 is not a good number either.
I like 6.
Let's take a look
I
here.
calculate this first.
Yeah.
See, see my technique. Follow. 1.
Minus. This is the issue right here. That's the issue. So your parenthesis has to be before the one.
Sorry. That's why.
Yeah.
1 plus 1. This.
And also that one
This
is,
I will multiply by 1%. No.
this should be 1 so you have to do this one. So look, so we're going to do 1, just following this format.
Okay.
1 minus
1
1.01,
minus
1.01 to the power of 11, and then hit the minus
11.
equals.
Where is minus? Was it here?
No, you need the plus minus sign, which is
Where is it?
on your calculator.
This.
No, not there either. On mine, it's right here. I have a plus minus.
I don't have it. I'll make like that. Minus 11.
That might work, yeah. And then another parenthesis.
I will close this.
Equals.
Equal.
That looks good.
This.
That's good. And then divide it by 0.01
0.01
equals.
Equal.
And then multiply that by the
Multiply
cash flow.
600.
Yeah. Looks good. Looks good.
Thank you.
That's a lot of decimal places. That calculator shows like 100 decimal places.
Now I will.
Guys, okay?
This one, now I calculate like this.
Now you're close. Now the only thing here is when it says the maximum price that somebody is willing to pay is that's going to be where demand intersects the y-axis.
Yeah, I make it 20.
So it's got to be here where the demand hits that's the 20. That's the 20.
It will be bigger.
Yeah.
So it will be close to 0.
Yeah, so 20 is here, this is 8, and then this is 0. That looks good. Guys, good?
This right here, this is the demand, and this is the price, right?
Close, except when it says maximum someone is willing to
Yes,
pay,
this is the 20.
20. So demand has to intersect here. Demand has to stop right at 20.
Yes, it should be here.
Exactly.
Right.
Yep, looks good. That looks
This is
good.
the demand, and this
Yes.
is the prices.
Looks good.
And this is the consumer, this is the part. No.
Yeah, so I'll get you guys.
It means that the equivalent, this 8 and 10 and 20, that one who will
Mhm.
because that's surprise.
You guys are close. Let me get you guys started on this graph here. Okay, so we start off with the graph here. We got price, quantity. And when it says the maximum price that somebody's willing to pay is 20, that's where the demand curve starts. Because this is the maximum price that everyone's willing to pay, right? So somebody's willing to pay 20. So where this hits the y-axis, that's 20. Then if I don't give you the minimum supply price, start supply at 0, like that. And then you guys can do the rest. But the 20 has to be here. Otherwise, you can't measure the triangle correctly if the 20 is not there. And we started at 0 down here so that you can measure the triangle. So then just draw in your equilibrium price and equilibrium quantity, which I gave you those numbers. And then you guys can calculate the consumer surplus. Yeah.
I want to remember me.
That looks good.
Surplus, which triangle?
Yeah.
Consider
So
that?
consumers, yeah, because consumers are the demanders. And consumer surplus means, for example, the price is 8, right?
Okay.
This guy's willing to pay 20. So if you go shopping and you're willing to pay 20 for something, and you walk in and you're paid 8, it only costs you 8. How do you feel about that?
I'm feeling bad. If the equilibrium is 8 and maybe 20. If
No.
I'm a consumer or supplier?
You're a consumer. So you only had to pay 8, but you're willing to pay 20. So you go shopping,
Yes.
you're willing to pay 20 for the
Something real
for something.
price is 8.
and the real
feel
price is
bad.
8. No, you guys. You'll feel good, right?
No.
You only have to pay 8,
Okay.
but you're willing to pay 20. You were going to spend as much as 20, but it only cost you 8.
No, if I'm a consumer, I will
Yeah.
feel bad. If I'm a supplier, I will feel happy.
No. You'll feel happy if you're a consumer.
Why?
So for example, this bottle of water,
Okay.
you're willing to pay 20 rial for this.
Okay.
That's what you're willing to pay, but I sell it to you for 8.
In this case, yes, I'll be happy.
That's what we're talking about here. That's consumer surplus. We're measuring your happiness.
Sales.
So his consumer surplus is 12, right? Because he is willing to pay 20, and this one is willing to pay 19. They only paid 8, so that's his consumer surplus. And if you add up the whole area of the triangle, that's everyone's happiness. Yeah,
Different.
yeah. So you have to measure the whole area of the triangle
Yes,
to get everybody's consumer surplus. In your own words. So what does it mean to you? It's kind of what is the definition of consumer surplus? Yeah.
This is the consumer surplus triangle, right?
Perfect. Yep.
Will be the total 40. It's half of this and this.
Yeah, because the equilibrium price is 10, right?
10 to 20, and this is 8.
Is that right? I don't remember what I put here.
10.
Oh,
20.
equilibrium price is 8. So this will be 8.
Oh, this is 8.
And this one is 10. Yep. Yeah. This one looks, looks good. Perfect.
And this is the one,
Perfect, yep.
which is here 20 minus 8.
Yeah, exactly.
Okay.
Looks good. Very good. Yeah.
It looks like this.
Yeah, that's,
And the 20 minus this is the 20.
now you're close here. So the equilibrium price is where this intersects. This has to be, this is going to be 10. The price here is 10. Directly over and directly down, this is going to be the quantity, which is 8. No, sorry, this is
No,
equilibrium quantity is 10. So this is 10,
This is 10.
and this is 8. Yeah.
Okay. And also the surplus.
Yeah, the surplus.
The Q is.
No, the
should be-
surplus is the area of this triangle here, from here to here, the area of that triangle. So you can calculate the area of the triangle using the formula 1/2 base times height. Yeah. You're welcome. Yeah, looks good. That's good. Good.
So what does it,
Yeah, so this,
define it?
yeah, what does it mean? So to me, it means like consumer surplus means you paid less than what you're willing to pay. Right? So for example, if you're, for this coffee, if you're willing to pay 20 rial and it only costs you 8 rial, you feel happy about that. You feel happy about that. And so when you guys are measuring the consumer surplus of that triangle, it's the measure of everyone's consumer surplus. Not just you, but everyone, because everyone has different prices they're willing to pay. And the total, so it's the total happiness of consumers. That's what consumer surplus is. So that's what I want you to write, something like that. This is a measure of consumers' happiness from getting a good deal on the product. Yeah, that's it.
Am I right? This is the Cerberus.
Yep, looks good.
Triangle. 60, right?
Perfect. Looks good. Looks good.
Customers, for the customers.
Yeah, it's happiness of the customer. Yeah.
Calculate the consumer.
For a producer, should be this area.
Perfect, yeah. That's that area. And this is a measure of their happiness, right? Because this one is their cost. And this is what they can sell it for. So they're selling,
What is their cost?
their cost is this curve here. This
Okay,
is their
okay.
cost.
So here he's in losses.
Yeah, so they sell it for this, or they cost this to produce it, they can sell it for 10. So they're selling it for more than the cost, and they're happy about that. So that's a measure of their happiness.
Okay.
Yeah. Yeah, dead weight loss, yep.
This one seems to be like 2 this area, but here I cannot calculate.
Yeah, so if you add a price floor of 10,
So I add 10
that's good.
more than 10.
Okay. Oh, you don't have to calculate it, because I didn't give you enough information to calculate, but just show where is the dead weight loss. Yeah, yeah.
Because here, we can say that it is the area in which the trade can be done between all the trading parties, which is consumer and supplier, and all the parties is satisfied.
It's related to that. So to me, though, when I go shopping, if I'm buying something at the store, like this water, if I'm willing to pay 20 for that, and it only costs me 10, I'm happy about that. I feel happy because I got a good deal. I was willing to pay him 20, but he only charges me 10. So I'm happy about that. So by doing the area of the consumer surplus, you're doing the area of not just my happiness, but everyone's happiness.
The whole
Yeah.
trading parties.
Yeah, so this is a measure of the happiness of
In all
Yeah.
business.
consumers and producers. Yeah, yeah, exactly.
And the producer surplus, or this is the producer surplus, right? This triangle,
Yes.
right?
Yep, exactly.
So what does that mean for him? He is
So this is the cost. This is the cost of producing here on this line.
okay.
And this is the price that he can get for selling it for. So he can sell it for more than his costs.
Mm-hmm.
So he's happy about that
Oh, okay.
because that's a profit. Okay, so let's let's do the answer to this one, you guys. So the price was, what's the equilibrium price, you guys? 8. And the equilibrium quantity? 10. And so the height of this triangle is what? 1/2, 12. And the base is 10. So that's equal to 60. Yeah, and this is consumer surplus. This one is going to be what? Producer surplus. And if we calculate that 1/2, the height is what? 8. And the base, 10, is going to be 40, right? Exactly. That's that one. So it looks good. Okay, I want to cover a couple more chapters that we didn't cover yet, just quickly. There's a VAT we have to talk about, which is very short. But I just want to give you the key information on VAT. Talk about financial markets too, which is chapter 2. Now that we've done economics, we can talk about that one. And then we'll come back to some problems again.